Let's look at the proposed tax rates in Budget 2016. For tax rates for individual, basically in terms of the slabs and everything, these have remained the same, right? But the surcharge has been increased to 15% if the net income exceeds rupees 1 crore. The education cess and the secondary and higher education cess at 3% of income tax and surcharge also remains the same. It's just that the surcharge for people having an income exceeding 1 crore has been increased to 15%. In case of firms, the tax rate is 30%. The surcharge here also now stands increased to 12% if the net income exceeds rupees 1 crore. The education cess and secondary and higher education cess remains at 3% of the income tax and surcharge. Now there's a slight bit of a reduction in case of tax rates of a domestic company whose turnover doesn't exceed 5 crores. In such a case, the tax rate has been reduced to 29%. The MAT rate remains the same, but if the turnover of the domestic company exceeds 5 crores, the tax rate is 30%. The surcharge 7% if the net income exceeds 1 crore and 12% if the net income exceeds 10 crores. Right? Sorry, this was actually 1 crore, not 10 crores. The education cess, secondary and higher education cess 3% of income tax and surcharge. One of the amendments which has been done for tax rates is in respect of newly established manufacturing companies. A new section 115BA has been added for AY 2017 and 18, whereby the tax rate of 25% has been proposed for companies provided they satisfy the following condition. Now this is an optional claim, it's not mandatory because it comes with certain set of riders. The first is that the company has been registered on or after 1st day of March 2016 and it is engaged in business of manufacture or production of any article or thing. Second is that the company should not claim any benefit under section 10AA, which is for the SEZ units, accelerated depreciation, additional depreciation, investment allowance, expenditure on scientific research, and any deduction in respect of certain income under Part C of Chapter 6A other than the provision of section 80JJAA, which we are going to see in respect of generation of employment. Now what this means is while you get 25% rate, you lose out on any of these benefits which might be available to you. So you might need to do a cost benefit analysis to see if you opt for some of these provision, what's the benefit you get out of it over the years, and if you opt for a lower rate of 25%, what is the tax cost that you have. The company has to furnish an option to claim this benefit before due date of furnishing return of income. For the foreign company, the tax rate is 40%, MAT 18.5%, surcharge 2% if the net income exceeds 1 crore and 5% if it exceeds 10 crores. This education and secondary and higher education cess continues to be at 3% of income tax and surcharge.